Hello everyone, welcome. My name is Tenying Yangsel. I am a foreclosure prevention housing counselor here at Chaya. So, as a housing counselor, my role is to help you navigate through the system. So, if you have any questions about your mortgage payment, if you want to do refinancing, loan modification, or if you are facing any foreclosure procedures, please reach out to me. I also speak Tibetan, Hindi, Nepali, Shachokpa, if that's more comfortable for you. So today we are going to talk about tax, property tax, and tax lien. This is our second info session regarding the foreclosure prevention. The first one was about forbearance. So if you want to learn more about that, please go to our Chaya's Facebook page. You'll find the video there. Again, today we are talking about the property tax and the tax lien sale. We have our Director of Housing Justice, Mr. William Spizak, here with us, and he will explain the tax lien sale and the property tax in detail. Thank you, Will, for your time, and welcome.
Hi, everyone. My name is Will Spizak. I am the Director for Housing Justice at Chaya CDC. Happy to have you joining us today. We're going to talk about property taxes in general, as well as some specifics that we think a lot of homeowners need to know, and a lot of questions that we get about property taxes, and talk about the tax lien sale, which is a big deal in the city. And unfortunately, a lot of folks that we work with end up on the tax lien sale list. We do outreach to, and we want to talk about ways that we could prevent you from getting on that list and make sure that you stay in your home without any issues from debt collectors and whatnot. So let's get started. Go to the first slide. So just a quick overview of what we mean when we're talking about property tax, right? So in very general sense, it's a tax paid on property owned by individuals or corporations. And the most common one that we talk about here in the United States is, tax on real estate. So of course, property taxes could exist on other forms of property, but when we use that term, we're really talking about the taxes you pay on your home, your land, your commercial properties. So in New York City, we're usually talking about 4 types of property taxes. There are 4 different classes. Class 1 is the one that we're going to focus on, the one that impacts most of the folks that we work with, because that includes all 1, 2, and 3 family homes, residential properties. And is taxed differently than tax class 2, 3, or 4, which may include larger multifamily buildings, commercial properties, things along those lines. So we'll go to the next slide, dive more into it. So how we calculate property tax in New York is often a little confusing. And there's a lot of resources available to help folks understand. But just a general overview, every home has a market value, and this is assessed by the city each year, looking at a number of different factors, what other homes in your area have been selling for, things along those lines. And there is then an assessed value, which is a fixed percentage of the market value. So the number that we're usually looking at when we're talking about what we're applying that tax rate to, it's not your market value. It's a significantly lower value that the city uses to figure out what your property tax would be. Then we have the tax exemptions that we apply, which we're going to talk about in a little bit more detail in the coming slides. So there are opportunities for homeowners to have that assessed value lowered by applying certain tax exemptions to it. And then lastly, we have the tax rate. So we have an official rate that is then applied to the assessed value minus any tax exemptions. And that is what is used to determine what your property tax bill is going to be. And we have the equation down here on the bottom where you see your annual property tax is that assessed value minus exemptions times the rate. And then, of course, there's tax abatements, which we don't get into much on this lecture. That may apply to more often to other tax classes. Okay, go over to the next one. So another question we often get about tax payments is how to make sure that you're paying your taxes and knowing, how that process looks, from a practical standpoint. And there are two ways that taxes could be paid by a homeowner. The first one is, and this is often the case if you are a property owner without a mortgage or have used, maybe a non-bank lender or have a different kind of financing scheme for your home, you would have to pay that bill directly, and the instructions are available on the city's website for how to look up what your tax payment is and make that payment, typically on a quarterly basis. And then the second way, which I think a lot of the folks we work with might be familiar with, is having your mortgage servicing company or your bank, take money out of your monthly payments that's built in and putting it in escrow, and then making your tax payments on your behalf. Again, typically on a quarterly basis. So as we mentioned, one of the things that we get asked about quite often is tax exemptions. So there are a number of different tax exemptions. The ones up on the screen are perhaps the most common and the ones we get questions about the most. So definitely the most frequent questions are about the STAR exemption, which is school tax relief. And there are two. There's the basic and the enhanced. They are available to owners of houses and co-ops and condos that earn less than $500,000, $500,000 a year. Sorry, and typically you get a annual savings of about $300 on your basic STAR. This current tax exemption, the way it's currently run, is actually awarded to individuals that qualify through the income tax process. So rather than seeing the benefits directly on your tax bill, typically you are awarded the exemption during the time of year around April when you're filing your income tax. And the same thing for the enhanced STAR. This one specifically available to owners 65 plus, again with annual incomes less than 86,000. So it's a much more targeted tax exemption, and you do get a little bit more back, about $600 a year. In addition, we have the senior citizen homeowners exemption, which again is available to folks 65 and up. And there's an income restriction on that as well. And that's much more specifically targeted for lower income homeowners. And that reduces the assessed value. Remember that part of the property tax equation, where we figure out what your tax bill is going to look like. That assessed value is a fixed percentage of your market value. Well, this exemption will reduce the value that your home is assessed at, which would result in a lower tax bill. And then lastly, the disabled homeowners exemption, again, available to owners with disabilities. And again, much more targeted towards, low and moderate income homeowners. And again, this reduces your assessed value in a similar way to the senior citizen homeowner exemption. All right, so the biggest challenge that I think a lot of the homeowners that we do outreach to face around property taxes are those that end up on the tax lien sale list. So we want to get into a little bit more detail about what a tax lien is and how the city deals with tax liens. So a tax lien is a legal claim against the assets of an individual or business who fails to pay taxes owed to the government. And in general, a lien serves as a guarantee of payment on any debt, right? So in this case, that debt is in the form of taxes. And if the obligation is not satisfied, the creditor may proceed to seize the asset. And that's usually where a lot of our homeowners end up in sticky situations that we want to avoid. So a lot of folks want to know, how do I know if my property is on this tax lien sale list? Well, luckily, there is an easy way to find out. The city government has a website where they list all the properties on the tax lien sale list, and it's broken down by borough. So you could go to the website, and I believe we'll be sharing that somewhere in the chat feature. And you would be able to go to your borough and click on download. You can either download it as an Excel spreadsheet or as a PDF. And what that looks like is something like this. You will get a spreadsheet, or again, it could be a PDF of all of the properties that are on the tax lien sale list for your borough. You will notice that your name does not appear here. So you would not be looking for your name. The information is provided in block and lot designations, which is usually how the city recognizes properties. If you look up your property on Acris, or you're looking on on Pluto data, which is the city's kind of master list, if you will, of all properties in the city, that's usually a very useful way of looking up a property, is your block and lot and your borough. But for most of us, that's not how we think about our homes. Most of us don't know our block and lot off the top of our head. So you're going to want to go over to the right to street name and house number, right? So that's usually where you'll find the address that you're familiar with. So you might want to maybe filter this by zip code, and that might narrow it down to all the properties in your zip code, and then you'll be able to find your street and address. So how can I avoid my property being listed on a tax lien sale? The best way to deal with a problem like a tax lien sale is to avoid getting on that list in the first place. So naturally, paying your taxes on time would be extremely helpful, right? You don't want to fall behind on your tax payments and end up in the tax lien sale list. And the best way to do that is be preemptive, pay your taxes on time. If you are behind, then you can enter into a payment plan with the Department of Finance. You could reach out to them directly, or you can come to Chaya and we can talk to you about your options and help you set up that payment plan with the Department of Finance. So we often get asked, how do I know if my property is going to be sold, right? If it's on the tax lien sale list and it's going to be charged off to, the debt collectors, how do I know that this is about to happen? You are going to be receiving notifications from the city, and they do make a decent effort to let you know in advance that this is going to happen. There are letters sent out 90 days, 60 days, 30 days, and 10 days before the sale. And it should look something like the picture that you see here. It should be coming from New York City Department of Finance. So if you see something from Department of Finance, don't assume that it's junk mail. Definitely open it and definitely read it to make sure that you are not about to have your tax lien sale sold. And how many missed payments, right? So if you missed one payment of property taxes, we definitely advise that you work quickly to get that resolved. But most likely that's not going to get you on the tax lien sale list. Typically, we're looking at 1 to 3 years of missed payments and over $1,000 or more owed to the city. So that could be, a situation where it's not a lot, right? It could be 1 or 2 missed payments, but it would have to be, over an extended period of time that you still owe that. But again, these things could easily snowball or, be kind of pushed to the back of your priority list as we have so many things going on in life. So don't wait till you're on that list. Work with us, reach out to Chaya and talk to us about how you can set up a payment plan and pay down those debts. So after they auction my property, can I get my home back? Well, that's the thing, right? Your home itself, right, is not being auctioned off. And this is a confusion that we often hear, right? They're not auctioning off your home. They are auctioning off the debt, right? The lien is a claim on the taxes owed, right? So we do see that this leads to foreclosure at times, and we'll explain how. But it's not it's not directly, debt collectors taking possession of your property or anything like that. They are collecting the debt, the unpaid taxes to the city. So you are still the owner of the home. After the lien is sold, debt collectors will try to get you to pay the debt. And there's usually a 6% interest that's compounding on that debt. So any one of us who's ever let a credit card payment slip or something along those lines, we know how interest can accumulate on that debt and get us in a deeper hole than we really want to be. So again, you don't want to end up in this situation. If you continue to not make those payments, not only will interest continue to accumulate and you end up owing significantly more than you started with, but then the collectors could move to seize the asset, which is the home. So this is kind of a back channel to foreclosure. So rather than ending up in that situation, where you're fighting for your home, we want everyone to be proactive, take on that debt, pay down the owed taxes, and avoid getting into that kind of a sticky situation. So when is your taxes due to get you off that tax lien sale list? This year, the date got pushed back because of COVID-19. So the last date that the city is giving folks at this point is September 3rd, 2020. So that is coming up very soon. So we really advise folks to get on it now. If you see your name on that list, reach out to us. We're happy to talk you through setting up a payment plan with Department of Finance and avoiding, getting into a situation where you're paying interest on debt to private debt collectors. And I'm sure that there are many more questions. So if you do have a question, please type your questions into the chat box in the whatever social media you're watching this on, Facebook or whatnot. And our team will try to respond quickly to those inquiries. If you have further questions or want to talk specifically about your situation, we advise that you contact our counselor. So Tenying is available to speak. You can call that number listed on the screen at extension 006 to get a direct line to Tenying and talk to her more specifically about your situation. And hopefully we were able to answer some of your questions today and look forward to reading more of them. Thank you so much for joining us and look forward to more topics and presentations in the future.